Are you interested in smart earning and investing your money in different company stocks? Do you wish to be up to date with all the expert analysis on investment trends? If your answer to any of those questions is yes, then you're at the right place. Hey everyone, and welcome back to our channel, Start Up Yourself. Today, we're back with a perfect video for those of you who want to invest their stocks and make big money. Investment is all the rage these days. Everyone is doing it. But it's important to have all the correct information and become well-versed with the rules and trends of financial investment before you do it. Ray Dalio is one such investor and hedge fund manager who has served as co-chief investment officer of the world's largest hedge fund, Bridgewater Associates, since 1985. Recently, China's crackdowns on its tech giants have led many investors to doubt the future of Chinese stocks. Afterwards, it also imposed restrictions on the education sector. Cathie, CEO of ARK's Invest, recently sold almost all of ARK's Chinese holdings, and many others have done the same too. But Ray Dalio has a completely different view regarding China's big move. Keep watching to find out what Dalio has to say about these recent developments. Dalio believes that China's crackdowns have been completely misinterpreted by the Western investors as being anti-capitalist, and that these people will, as a result, continue to miss out on what's happening in the Asian country. Let's take a look at the reasons why Dalio is betting big on China's future, and why he thinks everyone is making a huge mistake in understanding China's new policies. Ray Dalio's huge bet on China. If you know a little bit about stock markets, you are probably familiar with the concept of risk-return trade-off. This logical principle says that if you take higher perceived risks, then your potential reward is also bound to be greater. Ray Dalio is an unconventional fund manager in this respect. He focuses on low risk and high reward, and this is called the pure alpha strategy. Investing in volatile assets results in steep upwards and downward swings. While the typical retail investor may be okay with that, Dalio focuses on high net worth clients that are risk averse. One statistical parameter called Jensen's alpha takes risk into consideration in its equation. Dalio focuses on generating the highest return with the lowest volatility. The way he does it is that he uses investments that counteract each other, such as stocks and bonds. The all-weather portfolio has become synonymous with Dalio's name, and it is his expertise in microeconomics that has made this fund so successful and famous. Dalio can see and prepare for economic cycles in a way that other investors cannot. If you're enjoying the video so far, hit that like button and let us know. If you're new to the channel, make sure to subscribe and click on the bell icon so that you don't miss out on any of our videos. Ray Dalio's contrarian stance on China. Some of you may know about how China recently took down Didi from Chinese app stores. The Cyberspace Administration of China accused Didi of illegally collecting user data. What we saw next was China taking down the largest ride-sharing app in the country in the blink of an eye. This led Didi's stock to fall by 35% since Didi's IPO in July. The other event that shocked many investors was when China announced that the education sector would become non-profit. This instantly tanked the shares of many Chinese education companies. TAL Education, New Oriental, and GoTo stock are all down over 85 to 95% over the past 6 months. Unlike others who have grown fearful over these changes in China's policies, Dalio thinks that China has been becoming increasingly capitalistic over the recent years. But how would that make sense? As Dalio has said, many people are viewing these two recent steps as the Communist Party leaders showing their true anti-capitalist stripes, even though the trend over the last 40 years has been clearly to establish a capital market with capitalists and entrepreneurs becoming rich. Dalio's statement can be directly contrasted with Cathie, who stated in a webinar that the incentive for Chinese citizens to work seems to have diminished. Basically, Dalio believes the goal of the Chinese government is to improve the well-being of its citizens, and these policy changes are just small steps towards that main goal, even if the shareholders don't like it. Considering China's latest impositions to tackle gaming addiction among children, it seems that Dalio's reasoning is accurate. Besides, what would possess China to destroy the future of their economy and discourage innovation? Despite our speculation, Chinese policymakers have not given a reason for these changes, but Dalio recalls several instances in the past where China's actions were misinterpreted and thinks that if those lessons were any indication, we need to be smarter about this issue this time around. He thinks that their direction and goal has remained consistent, and that is the creation of a capitalistic economy. Instead of over-focusing on the small fluctuations, we need to take a bird's-eye view of the trends in order for this to make sense. Nevertheless, Dalio recognizes that there are certain risks associated with investing in China's tech stocks as well. The geopolitical environment is unstable. Most recently, the SEC has prohibited Chinese companies from going public, and the US government is threatening pension funds from being able to invest in Chinese stocks. All in all, Dalio's advice is to realize that China's state-run capitalism and Western capitalism has its differences and cannot be expected to operate in the same way. He believes that diversifying into China is important for any investor's portfolio. What are your thoughts on Dalio's interpretation of the recent Chinese trends? Let us know in the comments below. With that, I'll see you guys in the next one.